freehold or fee simple is usually the best option.
The gold
Doesn't get any
standard,
better.
What every Kiwi wants.
Yeah.
Flat backyard, corner acre section.
White picket fence.
How
Enough
good.
room to hit a 4 and not be out.
Maybe some cookies cooling on the windowsill.
Welcome to Checks and Balances, brought to you by Partners Life. I'm Michael Vincent. This is James Blair. And today we've got Adam Farrell, Director of Lighthouse Property, here to talk about what smart investors look for in investment properties.
We're back in your life. Adam, welcome back.
Thank you. Good to be back.
So today we're talking about what smart investors do. Adam, what do smart investors do?
Give it more runway than that.
There's quite a few different points and factors to consider when we're going through assessing a property investment. Short answer is it's just about stacking the odds in your favor. That's what I talk to clients about. Depending on your parameters, your purchase price, you can't have everything all at once sometimes. So it's really just about considering all the points we're going to cover and trying to stack as many of those in your favor as possible.
Yeah, and I think that's a really important point is not every investment is going to be perfect. Sometimes you take the best option you've got and you pull the trigger and you go for it. And having someone on your side that can kind of guide you through a bit of the unknowns, because, you know, I mean, I don't want to jump ahead, but we might be talking, the title isn't perfect or something's not quite right. Long term, yeah, it's not ideal, but it'll work itself out sort of thing. And I think having the confidence to go, I'm just going to pull the trigger and take the plunge is a really important point. So, Adam, the first one, I know that everyone's going to be listening to this just before they go to sleep and they're going to be like, yeah, talk to me about the intricacies of titles on properties. But it is a really important point, and New Zealanders have a huge stigma around some of this.
Yeah, I mean, what you said there about the stigma is sometimes one of the biggest influencing factors when you're considering a property. And really when you're making an investment, it's a bet on which one you think is going to grow the most.
Yeah.
Title types can have a really big impact on that for various reasons. I mean, when you're going through a property transaction, your lawyer will be probably the best person to reference when it comes to understanding title types and the pros and cons. Obviously, freehold or fee simple is usually the best option.
The gold
Doesn't get any
standard,
better.
what every Kiwi wants.
Yeah.
Flat backyard, corner acre section.
White picket fence.
How
Enough room
good.
to hit a 4 and not be out.
Maybe some cookies cooling on the windowsill.
This is very descriptive.
Yeah.
And then obviously you've got leasehold.
Papa, please come home, Papa. Sorry.
You've got a couple other types, leasehold, cross lease, and unit titles.
Yep.
Leasehold, you guys obviously understand what leasehold is, where you own the structure on the property, but not the land itself. And so therefore you essentially purchase a lease and pay rent
So my
on that land.
question to you, Mike, on leasehold, is there ever a scenario where a leasehold property is a good idea?
Yeah, absolutely. There's scenarios where leasehold properties are good ideas. If you've got a huge property portfolio and you want some really easy cash flow stuff in town, and you also might want to live in that apartment every now and then when you're on holiday or Airbnb or something, yep, you can do that. It's just risky, and you just need to know what you're signing yourself up for. If you live in St. John's, some of the leasehold there is they're all right. Not as an investment property, but as an owner-occupied, probably further out in St. John's. You just need to remember that you are signing up for an ongoing cost every 5 years, 7 years, 10 years when you have to rebuy the lease because that lease will come due. And you need to know what that looks like and I guess worst case and best case there.
Yeah, but if you're
Generally
buying...
speaking, don't go near them though.
Yeah, if you're buying for capital gain,
No.
it doesn't exist. It's
No.
only a cash flow play. And it also creates the famous ones are the scene buildings down in Britomart, right?
Yeah.
And going, I think some of them sell for like $5,000 or $1 or something like that.
Because what happens is the ground lease can jump. So you might pay $45K for your first ground lease for 5 years, and you might pay $150K for your next 5 years because there is no cap on that cost, reasonably speaking. So it can get really tricky, but I don't want to dwell on them for too long. I can tell you 100 stories about them, but it's not worth it because we're not going near them.
Yeah, and I would just quickly say, as you said, it's a complete cash flow play because you only own the structure.
Yeah.
And the structure is most valuable when it's new, right? So over time, it's only going to go down. It's just sometimes the appeal of the location that can help with the values. But
100%.
again, it's a risky
Everything
play.
around the viaduct, a whole lot of lease stuff there. And yeah, it probably works Airbnb, cash flow, and it's just for your typical investor, it's not worth it.
And then cross lease, I know you probably a little more bullish than some people on cross lease titles.
Us? Bullish?
Yeah, I think cross lease is one of those things where if it's not freehold, people just get a little bit confused and maybe don't exactly understand what it means. I shouldn't say this. I'm pretty sure my property is cross lease, and that probably shows my thoughts on the matter, but I'm not particularly bothered by it. What do you think, Mike?
One of yours, I think, is a unit title, and the other one is cross lease.
Yeah.
So yes, I have across both of the houses.
Just to clarify, I did not ask what you thought my properties were.
No, I know. I know what
good to know.
I know what your properties are. That's all. The thing with cross lease is that sometimes Kiwis get a little bit, like James said, confused, which makes people nervous, which means they aren't quite as keen on a cross lease property. I see cross lease as an opportunity, especially if you're put like an in situ property. You can spend 25 grand, and as long as it's clearly defined, might be a little bit more, you can freehold that. You probably get quite a bit of uplift on top of that, right? Where it becomes an issue is if the flat plan isn't updated correctly, and if you need to do any works to the properties, you have to sometimes get the neighbors to ask. Worst case scenario, you do any alterations to your house, you need to ask the neighbors and they need to approve it.
Now, Mike, I've got one follow-up question on this whole, I've got a cross lease in your title property. I'm just wondering, so you know this about me. Do you know my birthday? He knows the titles of my property, but doesn't know my birthday. Tell me your friend's a mortgage broker. Adam, let's move on.
Cool. Just the one last one to cover there was unit titles, but really quickly, much like cross lease, largely can often just be a stigma that affects it because the big word body corp gets dropped in there.
Yep.
Which has tons of pros and cons. Generally speaking, it's there to make sure everything operates as it should, smoothly for the residents in there.
Yeah.
Similar to a resident society, but a bit more intense. Things to look out for with unit titles or body corps as things like elevators or gyms or swimming pools, things that cost a lot, because that's when you start to get those outrageous body corp fees. Sometimes they're not a bad idea, but as we kind of said before, it's just about stacking the odds in your favor. If you can avoid it, do so. Otherwise, if you're limited by price range or if a particular deal comes up, you can consider some options as long as you know the pros and cons.
Yeah, and I think one of the other things is consider the number of people that you are sharing that title with. If you are in an apartment building, we all know the stories. It's very difficult to get 80 sets of individuals, if that's how big the apartment block is, to agree on doing something. If you're in a block of 8, 7, 9, 10, 11, reasonably speaking, everyone probably wants the same outcome, or it's pretty easy to get everyone to agree on something. So again, don't be put off by them. In some instances, they're totally acceptable.
There's always one person with way too much spare time, though, once it's into 1,000 emails.
Before we move on, we talk all the time about planning and growing our wealth, but protecting that wealth is just as important. That's why having the right insurance in place can help when life goes unexpectedly.
And that's why this episode is brought to you by Partners Life, a New Zealand operated award-winning insurance provider with over 300,000 Kiwis insured and 89% of claims paid.
Partners Life understand that having some insurance is better than having no insurance. They have flexible and personalized solutions for any budget or situation.
Check out their website in our show notes below.
Yeah, you comment there about how many dwellings or owners in the development itself. That's a pretty good segue into the next point where we're talking about supply versus demand and scarcity. Same sort of thing. It's something that I discuss with clients to begin with when they're trying to make decisions around which property type to go with is adding as many favorable features as possible into the property they're looking at within their price range. And there's quite a few things to go through. Quantity of dwellings in the development, not only can it be a headache for the decision-making process, but also from the supply demand factor when you're tenanting and renting out, but also when you're reselling. There's a couple of things to consider when it comes to quantities in a development. It's not just the overall quantity, because that can have other implications like issues with parking and general desirability and privacy. But it's really important to actually look at the specific typography of your dwelling. Because if, let's say, for example, you have a development of 20, and there's only actually two bedrooms in there, that can actually make the 2 bedrooms really appealing. So you can find little nuances within a development itself that make something stand out, which is really what you're looking for to build the scarcity, just standout features.
Yeah, that's a good shout. I mean, I've had lots of clients buy new build investment properties, and then they're in a really big development, and it's like a race to the bottom when you're leasing, you're renting them out. So
usually just at the start though.
Yeah,
because remember, not everything comes on the market at the same time when you're going through. We did see that quite a bit with those ones down in like Mangatee Bridge.
Yeah,
was it? There was quite
bunch in
some
South
big
Auckland.
developments out there.
Yeah.
They all settle roughly the same time. All of a sudden, probably half went to owner occupiers, half went to investors. You're competing with 12 other investors that all hit trading on the same day. Yeah.
Yeah, 100%. And then you can find little nuances like we spoke about this briefly in the previous episode, things like having 2 bathrooms rather than 1.5 or 1 and a toilet. Speaking with Monica, who's the director of Uno Property Management, she was mentioning how based on the data that they're tracking within their tenanting, even just from a rental perspective, the additional bathroom allows those properties to bring much more appeal to the market, and they rent out way faster than the exact same that's just 1.5 bathrooms. And obviously that is worth more in and of itself because it costs more to build. But when you go to sell that property as well, it's another appealing factor that should help make it a bit more appealing than comparables in the area. And then just basic stuff like if you can find a corner unit or an end unit, that makes it a bit more appealing again. You usually have a bit more land, a better view.
A few more windows on the end as well.
Yeah, a few more windows. And then car parking and garaging is always a big one if you can fit it within your budget.
Some of the car parks, I know we talked about this in the last one. Try and park a car in them. Just get in and get out because some of them are pretty tight. Yeah. I mean, most of them are fine, but sometimes on the original plan, things shrink a little bit when you go to build them and all of a sudden, whoosh, it's tight.
Yeah. What are your thoughts, Adam, when like somebody goes, I have to have a garage in my investment property?
Or I have to have a car park.
I think there's some validity to it depending on the scenario. The garage piece in particular is quite often an emotional thing because most people are only used to the buying process of a property that they're going to live in themselves.
Yeah.
It does depend though. Like when a client is playing with a bigger purchase price range, it's pretty valid to have that as a requirement because if you're going to spend the money to get into the higher price range, you do want the additional features. You might want, 5 out of 6 of the points we talk about to be on there. But it comes back to just working within your means, understanding what are the most important factors to have as must-haves, and then understanding what optionals should be on the list as well.
Yeah. Yeah. And potentially if you have 6 out of 6 things that you want in an investment property, that might mean that your cash flow is not as good because you're moving at a higher price point, right? And then you've just got to weigh these things up.
Yeah. I mean, these are discussions that I'm having with clients all the time. And we're obviously working with a client at the moment who's in that same position. And we basically got to a point where we just had to put our foot down with them just to help them make an appropriate decision around their investment property. Because they were just, everything was a must have, including cash flow, including keeping under 700K,
Yeah.
And it just gets to a point where sometimes you do just need a reference with someone like myself or some sort of property professional who's in the space and can actually just set your expectations accurately.
Yeah.
And that is one of the points further down in the piece about actually just working within your means, not only from a price range perspective, but also from a skill set perspective. And you guys can talk a bit more about this than I can, because obviously I'm in the new build space only at the moment with clients. But, especially in a rising market, everyone thinks they can be a developer.
Yeah. Yeah,
Right?
absolutely. You're a dentist, and a property developer. Of course, those two things are very complementary.
Yeah. And then from a renovation piece as well, right? Like sometimes clients who are really time poor, don't have much cash on hand and much cash flow, they'll come to me and be like, hey, we listen to this podcast and we think that we want to do renovations and house flipping. And I'm like, great. How much time have you got? They're like, none, we've got 3 kids. They take up all of that time.
We both work. Yeah.
I want to make $1 million in 10 weeks.
I wonder where they got that idea from.
Yeah, I think it's a really good point. I mean, like coming back to that client we were talking about before, they were like, we could pick between this one and this one. And we'd been going at this for like pretty much a year to try and get them to buy something. They were like, which one do you pick? And I was like, anyone, just pick something. Because if you're, assuming that, in this scenario, they're both fine properties, is that picking a property is just becomes the most important piece at a point, rather than just, if you've ever seen one of our presentations where we talk about Larry Linger and the implication of not making a decision, it is the biggest opportunity cost out there.
100%. Yeah. Ultimately with anything financial related and investment related, it's all about taking action. You won't get any results without it. And that's why I think it's so important to become really clear on your parameters and your wish list of things you're looking for. So if anyone's listening to this and they're currently in the market or currently trying to make decisions around property, it's really good just to take pen and paper and just note down what you think the must-haves are or what you think the biggest factors are to influencing the potential growth of a property.
And why? Why is this thing important to you? I mean, you mentioned kind of the emotional piece around like a garage, and that's just going like, I would like a garage, and going, all right, well, does that actually make sense when we're making an investment decision opposed to where you might be raising a family?
Yeah, and sometimes it can pair to the typography as well. Like, for example, in Christchurch CBD, a one-bedroom apartment doesn't actually always need a car park because it's maybe an Airbnb cash flow play. But if you're looking at a 4-bedroom in South Auckland, if it had no parking, you'd probably be in a bit of strife. And then, I mean, just comments around playing within your price range and considering pricing. There are a couple of key metrics that I help clients make decisions around because, especially in the new build space, a lot of the money you make is made when you purchase it. You know, you're not really adding value or doing anything crazy with the property itself. And there's a couple of rule of thumbs. The real obvious one is just buying below market value, buying cheaper than whatever else is available at the moment. That's a really easy way to validate your decision-making process, is if it's the best deal available or if it's cheaper than anything comparable. There's a few things to consider within that. Obviously, typography is one of them. Build quality is a really big one because you know, you don't want to go buy something dirt cheap that's actually a crappy product and it's going to fall apart on you. Yeah, so maybe just take some consideration when trying to find the cheapest option. I wouldn't necessarily say cheapest, but best value is probably what you're pursuing there.
The other, sorry, Adam, if I can jump in there as well. The other thing I do see, especially in the current market where it's down, is people just so focused on getting a bargain. And then they just keep doing borderline offensive offers to vendors, and they get turned down, and they won't change their strategy, which means that at some point the market will turn and potentially they haven't bought anything. And what I'm trying to say to some clients at the moment is, yep, we want the lowest price we can get, but the real discount is where the market's at, not if it's
already on sale.
Like I need an extra $5,000 discount.
Yeah, 100%. I mean, that really just comes down to decision-making processes. Obviously, there's been scenarios like this where there's plenty of people by the end of 2021 who were kicking themselves because they did the same thing in 2017, 2018, where they were just looking at the market, trying to negotiate too hard and ended up doing nothing. They wanted every box on the wish list to be ticked, and then they end up $100,000 or $200,000 worse off because they missed that kick, which hopefully we're going to see soon. So yeah, hopefully all the content we cover this time in this podcast is it's going to help people take some more action.
I love that James is like, I'm talking to clients about, you know, just take the price. It's already on sale. He actually was referring to me. We aren't immune from that. I think it's actually a decent point. We're not immune to this either. You know, like we're just humans. We're trying to negotiate and make decisions and, you know, with the information you've got. And it was James and I were having a discussion the other day where I was like, no, I'm not going past this number. And James was like, mate, look at where we started. Look where we are now. It's a good deal. Just sign the document.
Yeah.
And then I dragged my heels for like an hour signing it.
I think the phrase I used was, you are not going to ruin this for me, Michael. Do not be selfish. Sign the piece of paper.
And then I waited an hour.
Clip that, Em.
Cool. All right. The next point is amenities. Obviously, when you're looking at the growth potential of a property itself, the location has a massive influencing factor over the appeal that it's going to have to tenants and to future buyers. Amenities is a really important piece. Fortunately, when you're working in the major regions and major cities, it's usually a given to have some sort of transport infrastructure there, but you can also sort of play into future developments. Like the City Rail Link is going to have a really good impact to quite a few areas out west. In Sunnyvale and in Henderson, there's quite a few really cheap options there, somewhat because of the issue with transport and the delays with getting to the CBD back and forth. City Rail Link is going to shave that back by 10 to 15 minutes, the transport times.
Does anyone know when that's getting delivered?
30-50, was it?
Yeah, one day West Auckland, you'll be able to get into the city.
This next point is starting to get a little more on the complicated end, so I wouldn't encourage everyone to focus too much on this, but when it comes to utilities, when it's like water and sewerage, there's a lot of issues going on for developers at the moment. And so a really specific example of where clients can do really well at the moment, in these areas that are really limited, sometimes they're not consenting any new development. In Hamilton, there's a particular development that my clients were looking at that I put forward to them. And it's the only new build development that's allowed to occur in the area right now, purely because it had a pre-existing resource consent and the developer purchased with that consent. And so the expectation there is that over the next 5, 6, 7 years, it's probably going to be the only brand new development you can buy there. So you can sort of try to factor these things in advance. It's pretty easy to access online, the water supply limitations around areas.
It's even easier? Getting someone else to do it.
That's a good plug there, yeah.
Well, I mean that genuinely. Like you look at it and you go, here's my skill set. My skill set is doing this. What do I need right now? I need the best deal and the best info and the best decision on this. I'll go get someone else to do it.
100%. I mean, that's why we're here.
Yeah.
Okay, Adam, so lots of really good points in terms of, what to think about when you're looking at an investment property. Mike alluded to it before. For those that are going, well, this is all great, but I'd just like somebody to summarize this and help me make a decision. How do those that are thinking about buying an investment property reach out?
Yeah, 100%. I mean, look up Lighthouse Property or jump on the Lighthouse webpage. We've obviously got the links to book in to have a chat with me, or submit your contact details and we'll get in touch.
Great. Okay. All right. Well, thank you very much, Adam, for jumping on again.
No worries. Thank you.
Much love to Partners Life for sponsoring this episode. Please make sure to subscribe to the channel, give us a review, give us a like, and we will catch you next time.
His birthday is June the 6th.
It's the 7th.